Welcome to another episode of Insurance Gone Wild. I'm Dennis Settlemeyer, your host. This is my lovely co-host,
Stephanie Lencioni.
I got to let her introduce herself. She gets a little upset if I do it. She's got to say her name, Lencioni.
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 I don't know that I get upset. It pisses me off.
Yeah.
No, I'm just kidding. I got nothing. Just kidding.
Well, I think today we're going to talk, or for this episode, we're going to talk a little bit about kind of what we see for 2026. I'll talk about from the P&C perspective, that's property and casualty, which is home, auto, commercial, that sort of thing.
Oh, I've got plenty to contribute in that category as well, sir.
I will tell you what I think is, I'll just start it off. I think what we've been seeing for the last 3 years, what I've been saying for the last 3 years, this is going to be year's change. This is going to be the year's change. This is going to be the year's changed. 2026 will be the year that changes. It's slowing down. The increases have finally slowed down.
Okay, so I'm going to pause those. So you're talking about home and auto.
Particularly home and auto in this particular paragraph. And we're seeing the premium increases slowing down.
Okay.
We are seeing insurance companies opening back up, meaning that they're loosening underwriting. They're saying, okay, we want to bring on more business again. That's a positive. We are also seeing new insurance companies come into the market, which is very, very, very interesting. We've seen some try to come into the market the last few years and just couldn't do it. But we're seeing some come in. We're also seeing completely new programs pop up that have never been in the market before or have on a very limited basis. Now they're much bigger. So they're filling in, they're filling in the gaps of things. So, we have different insurance policies now for just wind and hail only. Now, somebody listening to this say, well, I had a wind and hail policy before. Not like this. This is different.
Right.
This is based on what they call parametrics, which is based on wind and hail. The parametrics is data. It's very much data driven, based on the National Weather Service or NOAA or other things like that. That is very much front and center, more so than in the past. It's just new programs that are different. We still have some of those traditional programs that are out there, but this is all brand new stuff. We're seeing movement in the market on the P&C side amongst home and auto. I talked to a company today, an auto insurance company that has historically been more of your
higher
risk
auto. Okay.
And they decided about 6 months ago to completely change their model. They're now for their regular insurance, what I'm going to call like regular standard. That's the term we would use, but for clients,
your typical driver.
Yeah, your typical driver, not your high risk or anything, just your regular driver. And so, me, I'm kind of blunt, and I'm talking to the guy on the phone. He's a super nice guy. I'm like, listen, man, I've been doing this for a while. You can tell me this stuff all you want to tell me. It's going to come down to what I see in your coverages, what I see in your claims, and what I see in your cost. And your cost is going to tell me a whole lot about
whether you want the business.
Whether you really want the business. You're telling me you want the business. I'm telling you, we have a certain type of client that we like. That's the kind of clients we go after. You're saying that you fit that bill. You're going to have to show me. And he was very nice and went on to say, oh, we can compete with Progressive and Geico. I'm like, yeah, 1 out of 100 times.
Right.
But anyway, it doesn't matter. I'm not going to say the name of the company, but the thing is that there are companies trying to do things differently now because they're finally, and I know that clients and people that are not in the industry do not understand this. I know that, and I'm not, and we've talked about this before. This isn't a down talking to them. You just don't understand how much money insurance companies have lost. Yes, they bring in billions, but they spend billions plus every year. The last year, 2 years, they're finally starting to see a profit. They've also tightened underwriting, which means things that qualify for the kind of business that they want. They're tightening those rules. They're making them stricter. And they're finally, I think 2025, we're seeing...
And limiting coverages.
And they're doing a lot of different things.
So
that's part of it.
Underwriting is one thing.
Raising
and then
deductibles,
limiting
all that
coverage
stuff
is another.
But they're finally starting to show a profit, and they're showing good profits. Now, I'm not taking up for the son of a guns, because there's still things that really torque me off about what that they could do sometimes. But they're starting to be some movement. Now, what will that look like at the end of 2026? I don't know what it will eventually look like. But I'm going to predict that we're going to see more companies come into the market. We're going to see more companies continue to open up. We're going to see some companies that have closed things down really tight and said, we don't want any new business right now unless we think it's perfect. And I look at some of the stuff we quote that they like, go, this is not a perfect deal. The one over here that you didn't want was a much better risk than this one, but they sit up there with their pencils and don't get down on the ground floor,
right,
to see really what's going on. But anyway, I think we're going to see more and more of that kind of stuff happen. Now, on the commercial side, we have seen a softening. A hard market means it's hard to place. It's hard to get insurance. The premiums are hard to swallow. A soft market means that things are much easier to do business. That's the difference. That's what that means. So through commercial, especially the last half of this past year, we saw the market starting to soften. At least some of the markets were really starting to soften, so much so that it was pretty obvious that things were changing. Now, what has really been odd is sometimes your mainline companies, if I named a company, people would understand it or know it, they tightened up, and they're still fairly tight. Like, you can't they're just tight. Let's just put it that way. I had an illustration.
Coal turns into diamonds.
Yeah,
right?
Something with a sledgehammer and a quarter. But anyway, they were just tight, and they're still tight. They've loosened a little bit. But what's been interesting is the secondary markets, which is called excess and surplus, those actually loosened up more, and they're supposed to be the ones that are tight. They loosened up more. In some ways, they loosened up more than the admitted markets, the standard markets of the big names you would know that advertise on TV. But now we're starting to see the standard markets relax just a little bit. They say they want to come back in and start writing business. Some of them actually do. I've been able to place some stuff through some regular named people that would know those names. Starting to loosen up a little bit, but it's still got, I think both industries still have or both segments of the industry still have a ways to go. And one of the other things that we're seeing is that, I don't know if you remember, but one of the episodes we talked about insurance companies have insurance. Mm-hmm. It's called reinsurance. So an insurance company may have $20 million deductible. I'm making something up. And then they have insurance called reinsurance on the backside of that in the event that they have a big catastrophe like hail damage in North Texas,
right,
and it goes over 20 million. Well, they've got an insurance company that's insuring them. And some of those reinsurance companies are global. They're not just reinsuring companies in the United States, but they're reinsuring companies in Europe and the Middle East and China. I mean, they're huge companies.
Right.
A long story short is that we're starting to see that those reinsurance companies are loosening up and dropping their premiums a little bit. Not much, but a little bit. And the fact that they're even dropping them says, okay, the outlook for them is looking
positive.
Mm-hmm. That's not a guarantee. Something could happen. Could have another huge event like we've had in the past. But anyway, we're just seeing some differences. Now, having said all that, what does it mean to the consumer? I think it means a couple of things. Number one, with the loosening of insurance companies that are wanting to start writing business and new insurance companies are coming to the market, that the availability of insurance is going to be there. The ability to have choices is going to be there, because in many cases, people don't even have any choice. They got to stay where they're at. Yeah, you went from $3,500 to $6,000, but your alternative is to go to $8,000 by switching to a different company.
Right.
I think we're going to see them have some more choices. That's a good thing about us having so many companies, is we can see the bigger picture. Will the rates drop? I don't think so. If they do, they won't drop much. We've been looking at a 12 to 15%, what they call average. Now, you have to remember that 12, 15% means it's an average. What may happen, in, like, say, in Texas, maybe it's a 15% average increase year over year over year. But in North Texas, maybe it's 25, 50%.
Yeah. Right.
Whereas in the middle of Texas, say Commerce, Texas, or someplace, it's very little.
Right.
But it's an average. And so what happens, what they call the street rate, what really happens is what people are really want to be concerned about, right? But we've got and
that doesn't mean if Dallas-Fort Worth averages 25, that everyone's getting 25.
No, some people could be 35. And
you may get 4 and then your neighbor get 35 or vice versa or whatever.
Yeah.
So I'm just trying to say, like,
No,
it's not
exactly
like
right.
just in the area, like, oh, well, now everyone's getting a 25% increase.
But the good thing that what I'm reading now is that instead of being 15% average increase, we're starting to read some articles that looks like the average increase across the U.S. is going to be 3 to 5%, which means it's still going to go up, but not as such a huge
jump and a rate
as fast as it was going. And so I think that is a positive for the consumers. Now, I will tell you, it still sucks that you're paying $5,000 a year or $6,000 a year for homeowners insurance. I'm not going to deny that. I pay that. I think it's absolutely crazy to have to pay that. And but there's a lot of factors that go into it, which we talked about in the past year, of the increase in labor, the increase in cost of supplies, the increase of, this and that. I mean, there's things that go into it. I do think, and this is just, again, my opinion, I do think that, so whenever you go in to do a homeowner's quote, the insurance company kind of gives you an idea of what they want to insure it for. So they want to insure it for this. You may say, well, it's only worth this. So we've said, market value has nothing to do with reconstruction value. Insurance companies look at reconstruction value because that's what they're going to be out of pocket. They're not going to be out market value. Whether market value's here or market value's here,
Correct.
They only want this. Now, what I am seeing, though, that irks me a little bit is they're saying, like, you've been to my house. They're saying my house is $300 a square foot to rebuild. I'm like, there is no way it's $300 a square foot to rebuild.
Right. I mean, that's a pretty nice house.
$225.
At $300 a square foot, like that's a pretty nice. That's a super, super duper nice house.
Yeah. And because I guarantee you that, well, let me go back. Anyway, it doesn't matter. I think that some of the reconstruction cost calculations are high. Not every company, but I think some of them are high. And I tell them about it, and they don't care because that's just...
What?
Yeah.
You mean not everybody cares about...
No.
Wow.
And I have it happen with a couple of companies on the commercial side. They're like, well, that's $400 a square foot. I'm like, it's a warehouse.
Yeah.
It's a shell.
Yeah.
It's about $200 a square foot, maybe $250 because
with
the
a
electric...
one-stall bathroom,
Yeah.
unisex, pal. Like, this is not...
And that's probably... $50 is probably because of the $250. The $50 is probably because of the electrical and plumbing.
Yeah.
But the rest of it, it's a metal warehouse. Do not tell me that's $500,000 or $600,000, to replace
rebuild,
that. It's not. Or the guy just built it for $175, and you're telling me I got to insure it for $450? No. Come up with a different deal.
Yeah.
So we still have that issue. That's always been an issue.
Right.
That's always been an issue. There's the back and forth between what underwriting thinks, because it's what claims have told them. And I'm like, well, we've talked about this. Claims pays for stuff they probably shouldn't pay for. And they don't pay for stuff they probably should pay for.
Yeah. If they tighten that part up and truly reduce the insurance fraud part of it, whether it's based on exaggeration or just absolute garbage claim, there would be enough money in the kitty for I think for the most part, right? Like we wouldn't be looking at what we're looking at right now.
Yeah.
But
well, I think
anyway.
that's part of what a lot of the companies have been trying to do, especially in Texas, North Texas.
They're just but they're overcorrecting and they're doing a very
well,
poor job.
The 2% wind and hail deductible is giving a bigger gap for them to have. I mean, by the time you pay 2%, you've paid 50%. Not 50, but you've paid a lot toward the new roof,
you
right?
may have paid 75%.
You could have,
Yeah.
Especially if it's a scheduled roof, meaning that they're going to discount it 3% every year of what they're going to pay out, plus your 2%. You may end up paying 50, 60, 70% of the roof easily.
I'm telling, but if you have $500,000 house, which I mean these days really isn't, it's kind
Not
of
that big a
standard
deal.
home.
Yeah, not that big a deal.
$10,000 deductible.
Roof's
Could be-
$20,000.
Not even.
Yeah.
I mean, for asphalt shingle, architecture, I mean, I'm just saying, but call it half and all that's fine. But yes, so I think that will definitely slow it's going to, number one, stop roofers from saying, I'll eat your deductible, even though it's illegal and all of the things, but that's a big nut to eat. $10,000. Now you've totally tapped into profit. And then of course the homeowner's having to come out now the full 10,000 or whatever the 2% is.
Well, the thing
they're
is
going to
that
be like, well, damn, never mind.
the insurance companies
good.
have widened that spread so that they're not on the hook for it nearly as quickly, right? And for not nearly as much. Homeowner, you're going to have to absorb more of that risk.
Yes, it's trying to get them to not
So
make
they've
a claim
done
after
that.
every hailstorm.
Yeah, and some
Yeah.
companies even come out and said, well, we'll do 3% wind and hail. We try to stay away from those companies except for people that really want it and they've shown us we believe that they could pay for it.
Right.
Because, there's a lot of reasons behind our reasoning on that, but I won't get into that right now. So there are some things they've done to adjust. I do think that in some cases they've over-adjusted. They would probably argue that, no, we did not over-adjust. And my argument will be like, well, you should have adjusted in increments over the last 10 years rather than waiting to do it all at one time. You know?
Yeah, and I do think we got hit with a whole lot.
Well, COVID
in
hurt.
a big, yeah.
COVID hurt because it slowed everything down. Then we had the freeze here in Texas, which affected the country. But it really affected Texas.
And we're big.
And we're very big. We had a lot of people here. And, we had a lot of water claims during that time.
But we got hit with a couple freezes too. That one hit.
the one was really
bad because everything was truly.
It was the entire state, which is odd. I mean,
Right.
that's like a once
Like when
every.
Houston has to shut down, you're like, well, that got weird.
Yeah, it's once every, I don't know, 10, 15, 20 years that happens. And it happened. And I'm like, oh, well, then actuarially, you knew this was going to happen. Why didn't you plan for it?
Right.
But there's also the other side. Can I sell it? If I'm raising the premiums, can we still sell it? Because you still need to bring in money to pay for other stuff that we got going on. So it's a yin and a yang, and I understand it. But I think that there were some companies throughout the last 3 years that really showed their true colors. Some companies that I had some respect for, I don't have nearly as much respect for anymore.
Agreed.
And I tell their marketing reps whenever they call me exactly what I think. And Chris will sometimes, I'll like, hey, do I have to be nice to this one? And he'll tell me if I need to be nice or not.
Right.
And sometimes I do. He goes, yeah, play nice, or no, I don't care what you tell them.
Yeah.
Type thing. But yeah, it's, I think we're seeing some movement in a positive direction, even for the consumer. Hopefully, again, these big rate increases are going to slow down. Doesn't mean they're going to stop. Are they going to slow down and not be as big a jumps? Are we going to stay on the 2% wind and hail in North Texas for a while? I know other states that even have flat deductibles, like $1,000, or they're now going to 1%.
Oh, wow.
And
I don't think we'll see. I think we'll see more programs to mitigate the 2%, 3% situation for wind and hail. But I don't think.
Yeah.
I don't think the insurance company is going to go back to less than that.
Why should they if this worked?
Exactly.
I mean, it's a business decision for them.
Yeah. It's just like why we're not going to see pricing tank, and we're not really probably going to go in the opposite direction. Slower growth, slower increases, yes, but not necessarily. Like, it's never going to correct back to where it was.
Yeah.
And it can't, for a lot of factors that you mentioned. You've got labor costs, you've got material costs, you've got a lot of different things. But the example that I always pops in my head is during COVID when lumber just skyrocketed. And you're talking about
plywood, $100, over $100 a sheet.
Right. Which, what is it normally? What was it before COVID?
I don't know, $25, $30.
Okay.
Maybe,
right.
maybe.
So, yeah. So,
but it was overnight.
It was overnight.
That's what hurt them. It was overnight.
Even though it finally corrected, it never fully corrected.
It went back down to what, $35, $40? I don't remember. I don't know how much it is right now.
Still not fully corrected.
It still didn't fully correct, but it did certainly go back. But it took a while. It didn't happen overnight.
A long time.
The price went up overnight, but the price doesn't come back down overnight.
Yeah.
Right?
And again, once people can get a certain price, it's hard for them to lower.
Yeah. And the other thing, and I've said this on another episode, is that people are like, well, we need to pass legislation that blah, 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 that whatever it is. It doesn't matter what it is. I'm like, no, you do not want the politicians in the insurance any more than you need to. Look what they've done with healthcare.
Horrible.
Whether you liked Obamacare or not, I'm not saying it's a bad deal. It just was poorly implemented. It wasn't a bad idea.
I'm going to say it every time this comes, and I say it all the time. It was meant to fail. Like it, don't like it. Did it have good aspects to it? Absolutely. Poorly implemented? Yeah, but it was meant to be poorly implemented. Like, that was the whole design. Yeah. Anyway,
because they wanted to get
it's hard for me
universal
to not.
healthcare.
Yes, it's hard for me to not say that when it comes up. So
no,
apologies, but
no, I get it. So the thing is that we had the Obamacare stuff. We've had, what was I even saying? I forgot.
You don't want politicians.
Oh, yeah. You don't want
anymore.
politicians in it because you may not feel it now. You may get a temporary relief now from whatever's going on, but they will screw it up in the long term. I promise you, because I know agents that are politicians and they are on state assemblies or state, not like federal level, but state level. And they will tell you the same thing that I've always said. Majority of the state representatives and senators at the state levels are lawyers. Most lawyers do not understand insurance. They don't understand it.
We know one who definitely doesn't.
Well, true.
Anyway.
But they don't understand insurance. Now, that doesn't mean that all of them do not understand it, but the majority of them don't understand it. They know a few terminologies, they know some ideas, but they do not understand how it works. And so you've got those folks up there down there in our case, trying to fix, they'd be fixing something they don't fully understand. And it will look good today because politically it looks good today so they can get reelected. But 10, 15, maybe 3 years down the road, it don't look so good.
Right.
It doesn't look so good. And we've seen it happen over and over. I go back to look at what they did to the gas can. You may not understand that, but
you
folks,
you say it a lot on this, and I don't mind it. And then you always follow it with, you may not know what that means.
You may not, because.
And by the way, I'll follow also with, I don't.
Yeah.
No, I know they screwed up the whole gas can.
The gas
thing
can used to be really easy. You unscrewed it. It had a nozzle that went down. You took and you flipped it over and you screwed it back on and you poured it out. It was that easy. Then they came out with this contraption where you had to push the button and hold it and push this other thing in. And it was like, you have to have 3 hands to be able to do it. And then it comes out in a drip.
Yeah.
It's like, anyway, it comes out in a drip. And I'm like, you don't want that. You want to keep the politicians out. Look what they did with education. That was the other one I was going to go to, education.
Well, I think most of us can agree that typically when the government's going to get involved in something, it's going to get screwed up somehow, period. And then the biggest issue is then you have these people, in my opinion, especially with healthcare, the thing that pissed me off so much about Obamacare was you have people who are voting and making decisions on stuff
They don't know what
it doesn't affect them because they don't have to go buy Obamacare.
And they didn't read it, and it doesn't affect them.
Well, they didn't read it, number one, but they knew it didn't affect them, so it didn't matter. It didn't matter. So then you have these people who are making, like, people who are super, super wealthy. They don't feel recessions, right? Like, that's
usually
they don't feel that milk has gone up by $2.
We're not talking about people that have a lot of gross revenue. We're talking about people that have a lot of net revenue.
Right.
Gross revenue is different. You can make $30 million and clear 100,000.
Right.
But we're talking about people that are super wealthy.
But yeah, and then the higher up you have these decision makers, it's like, again, they're not. I don't feel like the decisions are always made in the best interest when you come into the world of politics. That's all I'll say on that, right? Like, that's just so. No, we don't want government in any more of anything else that we have. For the love of God. But you have given a prediction that has lasted 25 minutes.
You know, I gave some thought to that.
You did.
I had statistics. I had all sorts of stuff. This has been right on top of my mind because I talked to clients about it. Here's what I think is going to happen.
Yeah.
Now, on the health side.
Oh, I was like, oh my God, he's going to keep going.
On the health side, the big, beautiful bill.
I will do a little
fantastically effed everything up. Not everything, but there's some good things going to come out of it.
This is one of those things where it's, and I said it before, this was a prediction that I made before open enrollment.
You did. We talked about this.
And I'm not going to lie, check the tape, but I nailed it. But here's the thing. I used this analogy before on one of our other episodes, but it's like when you clean out your room or clean out your closet, right? It looks like an absolute mess and a tornado swept through. So it's chaos. It gets worse before it gets better. And I do believe there's going to be light at the end of the tunnel with the big, beautiful bill act, all of that.
Whatever it's called. Is that what it's called? I think that's what it's really called, right?
It is called that, but so anyway. I do think, I think there is going to be light at the end of the tunnel. But here is one, chaos has absolutely ensued. And we had conversations even today where we heard like people are canceling left and right. And they're like, I went from $300 a month to $1,500 for one person for healthcare.gov, an HMO, limited network, limited doctors, limited da-da-da-da-da. They can't afford that. That's $18,000 before you ever step foot in a doctor's office. Do we have alternatives?
Plus your deductible.
That's what I'm saying. Like before you ever use it, and then you have to start paying for actual treatment. Because even with that $1,500, the deductible and max out of pockets are still $10,200 or whatever it is. Do we have some plans that can kind of offset that? Yes. For the right client. But for some clients, they don't make sense and they are stuck if they want everything to be covered. So it is, it's tough. As far as you having good news, and I do actually believe you this time. Because I'm the one who typically, like, I remember we did this like a year and a half ago and you're sitting there and we were sitting, I was there, you were here, and you're like, I think, and I was like, oh my God, that's adorable that you continue to say this. Yeah. I've heard you preach this for the last 3 years.
No, but it's happening now.
But I do definitely think if nothing else, there's going to be the slowdown, right? Yeah. I agree with you. I don't think you're going to see big drops like, oh my gosh, good news, your insurance went down. I got an email from our person who's great. And she was like, oh, great news. Your premium went down. I was like, yeah, that's because I dropped a car. Like it just didn't go up as much, but I had 3 vehicles and I went down to 2. So
it didn't drop much.
Damn right. It better have gone. It didn't.
Like $20 a year.
Yes,
something?
A month. But we pay annually. So like $200 a year it dropped. And I'm like, yeah, so we still dealt with a pretty nice increase, but we'll take the win. It's fine. And I'm like, okay, but the math tells me it's
you're just going to take the win where you can, right?
And I'm going to take it. I don't know. Maybe I'll get a new agent. But
yeah, well,
what are you going to do? No.
I got a couple you can call.
Yeah. Anyway, so I do agree with you, and I think it is going to be a much easier conversation for agents to have with their clients this year.
On P&C.
On home and auto.
On home and auto. Well, I'm talking P&C in general, but on health insurance specifically, what I'm seeing is what I'm hearing, and I overhear people at a restaurant or wherever, coffee shops, boom, man, I won't say the word, but it went up.
It went up.
It went up a lot. Now, having said that, let me ask you this, and I'm usually don't want to talk too much about bills unless I've actually read them,
Right.
or I've read a synopsis of them, because then I get into arguing with people that haven't read anything,
But they saw a headline.
and they saw a headline and
Yeah.
they have an opinion. But let me ask you this: did I read somewhere that the big beautiful bill was supposed to open up cross-state where you could do like cluster
no
groups?
longer associations?
So no,
Is that what
no.
you're saying, or you're saying
Yes,
cluster
well,
groups?
I'm saying cluster groups, like you could get 15, 20 small businesses together, go and buy a group policy now, and you can cross state lines with it much easier than you could before. Did I read that's coming?
I don't know.
That would be great if you could.
So that would be great, because a lot of people do try to. It's the whole concept of insurance, right? Is that you're pooling your money together and you're
Correct.
trying to mitigate the overall loss, the big loss or whatever. And that used to be a thing. Now it's not a thing. A lot of carriers, even if they open it up, though, I have to tell you, I don't know that carriers will really. They don't like that. It's the association model in my head is what you're explaining, essentially, where these people get together. They've got, they've got something that pulls them together, like-minded or similar industry or whatever the case is. And they don't, like, we've had associations who have called and they're like, hey, we're trying to get, we're blah, blah, blah association. We've got 150 members, which are small, not members, individuals, but businesses trying to insure whether they're mom and pop or they're bigger or whatever. And they're like, no, we don't do those. Carriers don't do it. They have a couple associations that have already been formed. They're like, well, do they fall under this? No? Okay, great. Then we don't do associations.
All right.
So, but I don't know. I don't know if you
think
read that.
I read that
I
somewhere.
will look into that, and then maybe we'll take a deeper dive into that
Because
specifically.
that could be a big, big deal for a bunch of small businesses.
If carriers open it up, because it also then, just because it now can be done, doesn't mean the carriers want it to be
then
done.
what you may run into
But
is
capitalism, right? Somebody will do it.
That's what I'm getting ready.
Yeah,
It's like
somebody will
we
do it.
have new products and new companies that are popping up on the property
Because somebody will
casualty
try.
because
Yeah.
somebody's trying to do something different.
Correct.
So I think you may run into something like that.
So what I think will happen for 26 is we're at the beginning, right? So when I say 2026, the premium, as far as Obamacare, the premiums are what they are, right? They're set for the year. But I think you're going to continue to see pretty significant increases if you renew outside of January 1st and you continue to renew throughout the year. I think they are going to be significant increases. And again, if your company renews in April, I think you're going to see the benefit plan change. Maybe same coverages, but maybe they're not contributing as much, or maybe they've changed how it's covered. I think people need to you need to pay attention to what's going to be happening in your offerings in 2026 if you didn't have a 1/1 renewal. So like teachers, a lot of teachers renew at the beginning of the school year, right? So it's a 9/1 effective date because they go back to school, whatever the case is, and then they have to enroll. Look for that. And I think we'll have a really big push for some of our alternative options that we offer with teachers come summertime, because they're going to look at it and say, okay, now, whoa, it was bad before, but now this is getting a little bit too crazy now. So that is what I think. Another kind of falling into that prediction, what I was saying before, the rates are the rates are the rates for Obamacare, all the things. But I think at some point people are going to be like, wait a second. Okay, I paid January because I needed it. I was kind of in panic mode. It was holidays. I wasn't really putting much thought into it. Holy shit, I don't want to pay $1,500 a month anymore. What can I do? Because you can cancel at any time. You're not locked in for the year. So I think we're going to see a lot of first quarter, beginning of second quarter drop-offs. And unfortunately, if they're not seeing this or if they don't have anybody to talk to, I think they're just going to be uninsured. But hopefully those people who are looking to drop can at least talk to somebody. Because here's the thing too, even if you've got a pre-existing, where let's say our plan that we've talked about, our health sharing plan, is so fantastic, but it doesn't cover pre-existing for the last 3 years. But if you're going to drop coverage anyway and just be completely self-insured, then at least get insured and covered for the unknown, right? And like, if you're going to self-insure the stuff that you already have, then at least cover for a reasonable amount the unknowns. That is my mentality, right? Where we were talking dental insurance earlier, where it's like, I'm not going to fight people if they're like, I don't want to pay for it. I'm like, oh, okay, that's cool. You can self-insure a cavity or a root canal. Please don't self-insure the unknown and the unexpected. I mean, there's too many options that are affordable to not have to be uninsured.
I was reading something the other day, just in the past week or so, we were talking about, people are upset because the premiums on healthcare have risen so much as of January 1. And one of the, or what website it was a news site. Yeah, we're just not seeing that big of a drop off in signups like we thought we were going to see. And I'm going, that's not what I'm hearing at that coffee shop or, wherever, the restaurant or whatever. People are upset. Like, I'm not paying that. And they're just not, I think more and more people are going self-insured.
Yeah. And I do think there's something about people saying like huffing and puffing, but then when it comes down to it, it's scary. It's scary if you have coverage and then you decide that you're going to no longer have coverage. That's scary. It's a weird weight. That's like, oh my God, now what if okay, now I know something's going to happen. And then you get over it, right? It's that initial, and then you go through it and you're like, hell, whatever. I've been uninsured for a month now. Nothing's happened. No big deal. So, but I think it's tough for people to pull that trigger. But I
think you'll see some drop-offs, which is going to cause insurance companies to raise rates throughout the year. Not if you already signed up with a plan, but for the renewals and things like that, they're going to start raising rates to help offset those folks that are dropping, that they're not bringing in the premium for. So,
yeah, I mean, it's going to be interesting.
I know I'm not looking forward to it. No. Where am I? March, April, May, isn't it? Or did we redo it we redid it, didn't we?
We redid for May. Yeah. We'll look at it in May. Well, we'll look at it before May, but yeah. So I think in the next 3-4 months, we're going to see a ton of people are dropping off. And maybe, here's the thing, guys. If you're thinking about possibly dropping off, maybe get your free exam, right? Get your preventative, do all of the testing, get your blood work done, get your whatever. If you have something that you need done, get that done. And then if you're going to drop off, then drop off. But don't, I don't know.
Yeah,
use it for what you can. Get the most out of it, and then drop it if you're going to.
Going through my head over that. Hoping that a part of it is I'm hoping the politicians will somehow figure something out to make it.
Which goes totally against what you said about.
I know it does,
but they can't though.
But there's too much money. They opened up Pandora's box, and you cannot. Like we talked about before, you can't shove it back in. It's out there. So you got to deal with it.
You have to deal with it.
I'm saying don't let them open the box to begin with. That's
correct.
My point.
No, I
now
understand.
That they've opened the box, they have screwed it up. You can't say you didn't know this was coming. Anybody in the industry knew it was coming. Hell, half the politicians knew it was coming, but they wanted to do something at the time to look good so they could say they done something, do something historic. I get it. I'm not upset about that. It was just
because
poorly.
You're not doing your job. Your job is for the people.
Well, no, the thing is, I think...
And they served themselves.
No,
and
I think some of them had really good... They were like, we want to help people that are uninsured, that have pre-existing conditions. I love that.
And there's a different
and
way.
Well, that's my point.
Yeah.
It was a great idea. It was poorly implemented. That's my point.
I know.
And we knew. That's back when you and I first met. It's like, this is going to screw up that was 15 years ago, however long ago. This is going to screw up the entire industry because of what they did. And it has. Everybody knew it.
But that's my point. And that's why I'm so angry about all of it, is because everybody knew it then. Before we didn't need a magic 8 ball or freaking...
Politicians don't understand it.
It's not that they don't understand it. They don't give a shit
And
because they don't have to live by it.
agree, but
so they don't care.
They didn't understand what they were doing.
How's my cadence? Is it pretty level?
Yeah.
Getting hot over here, baby.
They just don't understand insurance. They don't.
Yeah. And again, and I would argue that they either do and don't care, or they don't and don't care.
Well, we talked to a couple industry experts. This is the advice that we got. Really?
Which is such...
Going through what filter were you looking at
Yeah,
that through? I
struggle. But I think... So somebody asked me in a networking group, gosh, and I had something else to say that we were talking about. It'll come back or it won't, and who cares? But they're like, hey, how do you fix health insurance? And this was before Big Beautiful Bill. Like, this is probably a year ago. And they're like, I was doing a presentation. They're like, so how do you fix? Oh, remind me. It was a client who moved from France with socialized medicine. But anyway, how do you fix health insurance? And I was like, quite honestly, you can't unless you absolutely just implode it.
So you got to blow it up.
You have to completely start over.
Yeah, it's screwed up.
And what's kind of happening is that's kind of what the Big Beautiful Bill is doing. It's kind of blowing it up, and it's doing a reset for people to be like, hey guys, to show the insurance carriers like, yeah, you're not going to get bailed out anymore. And then the people are done paying it. So you better figure out how to step up your game to get capitalism back on board. And
I
back
actually
on track.
said that on this deal. You take away the money, and
because it's all this.
Capitalism will figure out how to fix it.
If you allow capitalism to do it and not politicians.
But it's going to take 2 or 3 years for that to happen.
Correct.
And I don't know that we can wait that long.
Unfortunately, it's going to hurt some people more than other people.
I agree.
What I was going to say we should probably wrap up after this, but what I was going to say, because we were talking about the Obamacare, how it was like intended to then, what we believe was to then push it toward socialized medicine, right? One of our newest clients, he's like, yeah, we lived in France for the last 3 years, And he's like, I'm on Medicare now. This is fantastic. And I was like, it's so funny. 10 years ago, people weren't real excited about Medicare. But now, because under 65 coverage is so awful, then they're pretty excited. So yeah, that's great. And so he was talking about it, and I'm like, ooh, I need to be a little bit careful about, because if you say that you came from France and they have socialized medicine, a lot of people can think that it's fantastic. And now he's here. And so trying to get coverage for his wife, who's not 65 yet, and talking about different things. And he's like, yeah. I said, so was socialized medicine, was that a good thing in France? He goes, if you're healthy, it's great. If you have any sort of issue, it's awful. He's like, I wouldn't wish that on anybody who had any sort of health problem. But if you're healthy, yeah, then you're not paying for anything. And I was like, well, and to be fair, not to like nitpick semantics, but you are paying for it because it's socialized medicine. So every single person who pays taxes or who does this or who does that, you are paying for it. I mean, people in Sweden, I think Sweden has like a 60% income tax.
Yeah.
60.
Yeah. And
it's something like that. Don't quote me on that, but I had a friend who was out there, and
historically,
I think it was like 60%. And I'm like, okay, then it's not free healthcare.
Yeah, no.
It's not free healthcare.
I will tell you though, from a historic perspective, we're going to wrap it up.
52.
Yeah.
Sweden is 52.
From the historical perspective,
thank you.
We are in the United States. It's about the lowest tax brackets we've had in history right now. Back when Kennedy was president, the highest tax bracket was 72%.
God, how do you even live on? Like, that's crazy to me.
It was the highest tax bracket, 72%.
Then why work? You've totally taken the incentive away.
Now, back in the 30s or 40s, the rate was even higher. If you made over, let's say, $200,000 a year, you paid, which was a lot back then, right?
It's a lot.
You paid like, I'd have to go back and look at the numbers so somebody can tell me if I'm wrong. 90%, anything over 200,000.
Like, that's crazy.
And then if you were in California, you had the state tax and you had to pay an extra like 10%. So you end up making nothing.
So you're a doctor who's like under the poverty line.
So here, listen to this. Well, a doctor now, but 200,000 back in would have been a stupid amount of money, right?
Sure, but
so there was an actor back then who decided he was only going to do so many. He was only going to do so many movies a year, and once he hit his number, 200,000. He was done. He wasn't doing any more movies. You know who the actor was?
Is it the It's a Wonderful Life guy?
Nope. Close.
Is it John Wayne?
Ronald Reagan.
Oh, smart.
And guess what he did whenever he became president? Cut taxes.
Yeah.
And a lot of it came back from his experience of whenever the rates were so stinking high.
Wow.
And so we are in the lowest tax brackets in the U.S. we've probably been in history right now. So anyway, so the Democrats do have a little bit of an argument that we could go up if you make over so much money. The problem is now the folks that making so much money, they control the prices on everything. So if they just raise everything a penny, they're still making the same amount of money they were, but it affects the people downstream.
Right.
So any case, that's a whole nother story. So overall, we see some movements, good, bad.
Good for home and auto,
for sure what's going
PNC, not great. Buckle up for health insurance, essentially.
So anyway, thank you all for joining us. Send us an email, contact@igwpodcast.com, or give us a call, 817-753-0093. And we will be glad to talk to you. If you're having a problem with health insurance, give us a call. Stephanie can perhaps help you with some of the specialized programs that we have that are unique. All right. Thank you so much. Talk to you again. Bye.